So hello everyone, welcome to Grow with Growtham YouTube channel. So today in this video we're going to discuss about what is a gap up and what is a gap down. So many of the people they have those intraday strategies, gap up gap down strategies, but they actually don't know what is the real meaning behind why is this gap down or gap up happening. They don't know anything about it. They just watch some random strategy videos and just trade according to that, and 5 days they make profits and 10 days they make losses and they blame that the strategy is not nice. Okay, it happens. So if you are new to this channel, please make sure you are subscribed and click the bell icon so that you don't miss any of our updates. And as you guys know, we are a new channel, so if you feel useful and if you feel that this channel can help someone else or your friend or family, please do share among them also. So without wasting any more time, let's get into the video. So now you're seeing the Nifty futures and it's a 1 hour time frame. So as you can see here, there are many gap downs and as well as gap ups. Yeah, I'll just delete this so that it will be more comfortable for you to understand, or else I just open Nifty itself. Okay. So as you can see, there are gap ups, there are gap downs. Before moving on to the gap up and gap down, first we have to know that the market has been divided into three. That is a pre-market, the regular market, as well as the post-market. So majority of the traders know that the pre-market is the market which is right above the market open. That is the regular market, that is at 9:15, and post-market is the market after the regular market close. Okay. So these gap ups and gap downs usually occurs in the pre-market and post-market sessions. For example, if let's consider that let's consider this scenario. Okay. I'll just zoom in a little bit. So I'm going to make this video really quick. Okay. Now let's consider this as a stock. Now this is 1 rupees and this is going to be 10 rupees. Okay. Now what happens is, once the market closed over here, so there will be a post-market session. Okay. In this post-market session, some kind of news has been occurred on that stock. That is, let it be a negative news, let it be results, let it be profits, whatever it is. So it was a negative impact. So what people usually do? So my question is, when you have accumulated in a stock and you see you hear a bad news, or the stock is going down or something like that, something negative about that company, what will you do? Obviously you will sell it off, right? So when that kind of sell-off happens at that current price, that is when the market opens with a gap down on the pre-market of the next day. Okay, so this is how a gap up and a gap down occurs. So how can we use this gap up and a gap down? So many people sell this as a strategy, guys. Honestly, I'm saying, I'm not mentioning anyone because I don't want to create hate. Okay, so there's a lot of YouTubers as well as the other so-called gurus who teach stock market for 2 lakhs 3 lakhs, okay, whatever it is. So first of all, you have to understand that if the market is opening with the gap down, you have to look at the previous candle. Okay, if you're looking at a 15-minute, if you're looking at a 5-minute, if you're looking at a daily, not daily, 4 hour or whatever it is, you have to focus on the last candle. Okay, because that is where the gap down has occurred. So, okay, that is where the market has closed. So from that price, the market has fell with a gap down. So obviously in future, if the price is moving up to that close, you can expect a reversal, right? Because there is a selling pressure at that point, and that is why a gap down has occurred. Same vice versa. Okay, as you can see here, at this point there is some kind of buying pressure, and that is why a gap up has been formed. So if you have considered that point as a buy point, you would have taken this entry. So now the market went up and then it is coming down. Now we already know that at this point there were some amount of buyers, and that is why a gap up has happened, right? So the gap has not yet been filled. When the market came down to that level, which we already know that there are some amount of buyers, we can expect a reversal and see what has happened. The market has given some quite a good movement from almost 0.7%, that is almost 136 points in Nifty. I think you would have captured that in intraday itself. Okay, so this is how you can utilize the gap up and gap down. You have to understand the meaning behind the gap up. Why is it having a gap up from the previous close? So what can we do when the market is reversing to the previous close? So this is how you plan your trades. It's very simple. Okay, so I have only explained you in Nifty. I don't wanted to make this video lengthy, so please do open Bank Nifty stocks and just check it how it is performing. I think the average accuracy is around like 60 to 70%. So the rest of the accuracy matters upon your risk management, your money management. It all completely depends upon that, which increases your accuracy. Even if the strategy has 100% accuracy, and if you don't manage your money as well as your risk, then there's no point in having your 100% accurate strategy. Hope you get it. Anyway, make sure you backtest it maximum before entering into any real trades, because it's your hard earned money. Okay, then I'm winding up the video. If you still haven't subscribed, make sure you click the subscribe button. That's all you can give it back to me. So anyway guys, thank you for watching. We'll see you on the next video. Until then, bye and take care.